and gentlemen, please give a big round of applause.
Hello. Hello, everyone. Welcome to our panel about early stage investing in Asia. I'm very excited today because we have our panel of distinguished experts that are on the forefront of early stage investing in the Asian market. My name is House. I'm a general partner at Agnostic Fund, a liquid token fund. We're based out of Thailand. And I will be your host in this session. I'm very honored to introduce you to our distinguished panelists, Sharvin from Saison Capital, Ciara Sun from C Square Ventures, and Gabriel from ARC. He's coming soon. Asia, with its diverse culture and economies, poses a unique set of opportunities and challenges. Let us dive in. Sharvin, can you tell us a little bit more about yourself and also explain your firm's investment thesis and philosophy?
Sure thing. Hey guys, Sharvin here from Saison Capital. We are the investment arm of a Japanese financial institution called Credit Saison, where we are one of the largest credit card companies as well as one of the largest wholesale lenders to different banks, non-banking lenders, and quite a few tech unicorns that have embedded fintech businesses. And for crypto, we kind of invest from ideation stage to Series A, and have also invested in more than 30 funds so far, crypto and non-crypto. And in terms of our investment focus right now, I guess we are pretty much focused on, I guess, quote-unquote institutional DeFi as well. Because so prior to Saison, I was actually one of the co-contributors for one of the largest order books, where at peak it used to do 1.4 billion in daily volumes. And then like I saw this trend that a lot of banks and institutions were really keen on crypto, but they were not really super keen on how it is currently done, which is, I guess, like a lawless land, right? Like a Wild West. And then we kind of decided to see what are the benefits to crypto and a bank. And the biggest benefit for any new technology is getting rid of the costs. So anything institutional DeFi where we kind of mix TradFi and some of the DeFi applications, we definitely have a big focus on that, and which also includes RWA. We kind of have backed a lot of the unicorns in Southeast Asia and India that have been doing fintech private credit as well. So we are also pushing them on-chain as well and helping them incubate their crypto subsidiaries as well. And we focus a bit on privacy plug and play as an optional privacy route instead of like just having a chain that's where users don't have options but have privacy. And lastly, because of the credit card angle, we are also quite focused on the payment layers.
Thank you, Sharvin. Ciara, can you?
Yeah, I'm Ciara Sun, founder and managing partner of C Square Ventures. We are a early stage Web3 investment firm. And prior to found C Square Ventures, I was the vice president of Huobi Group, had listings, investments, and also built institutional business unit and global markets in terms of growth for the exchange. Joined crypto in 2017, and prior to that, I was doing traditional finance in New York, management consulting with BCG, and this is my fourth, I think, KBW week, and this is where we had it in 2018, so very glad to be back. And a little bit about C Square Ventures. We are actually new. Started C Square Ventures after the whole China shutdown exchanges thing in 2021, and then Huobi was sold to a third party. So that was like a year ago. And we raised $100 million last year from reputable investors. We actually are very lucky to have a local supporter here is the Hanwha Group, which is one of the largest insurance company based out of Seoul, and they invest in us as a large LP. We also have other investors like some ex-portfolio companies, Polygon, Algorand, Avalanche, Immutable, Gala Games, and also some market makers I used to work very closely with, like GSR, Kronos, Nortet from Europe, and also Web2 investors like Google. We're Google's first and only crypto fund investment. So with all of that resources, we aim to bridge the gap between Web2 and Web3 and really be providing hands-on help and personal expertise for our portfolio companies. So our thesis is very, very simple. We just try to invest in them early and guide them through the way for not only go to market for the product and also how to build a token around it. As you know, I was in charge for listing for a couple of cycles. I've been through a lot of building the community and listing strategies, and that's the kind of help that we can provide to our portfolio companies. As for the thesis, I guess that's pretty much it. We're like agnostic. We don't just favor a chain over another or favor any ecosystem over another or any region. We try to become the East and West market bridge and also invest agnostically into all of the Web3 early stage protocols.
Thank you, Ciara. Yeah, very impressive. What are some exciting sectors in crypto you want to talk about and that you're investing in? Sharvin?
Okay, I guess I kind of went through this, but institutional DeFi and RWA, for example, is one of the lowest hanging fruit. Like T-bills is sure, like I think pretty easy, but what is really great is, I guess, the private credit models, especially in like Southeast Asia, Latin America, where people are, those guys are doing like ridiculous amounts of volume, and the benefit of them going on a blockchain is they kind of reduce their back-end cost by 26% or so if they go on a more high throughput chain and low gas fees chain. And that's like one of the biggest value add. And you know, we are also exploring like quite a bit of collaboration between these kind of companies, I guess Web 2.5 companies and some of our crypto companies that are purely on-chain, like for example, like a stablecoin protocol, and basically tokenize the private credit and use that as collateral for this minting of the stablecoin and just exploring some easy use cases like this. And with regards to the other things we are focused on right now is on the DeFi side, we are still super bullish on the whole order book model, but not a pure on-chain order book because I kind of was part of it, and we saw that it was really, really tough to be sustainable unless you have big companies just giving you cash nonstop, like every week. And so we kind of believe more in like a hybrid model for our order book. But that being said, like if you really want real adoption and activity happening, you need an order book, and AMMs will just not work. And I guess in terms of ecosystem side, we have no bias towards anyone, but the only thesis we have is we want to back like leading applications, leading fiber optic applications, or you can say instead of dial-up applications. Because if we get mass adoption today on whatever chains right now, like pretty sure, I think most of us will be kind of down because the networks it will be impossible for this to happen, for the networks to take in. So that's why we're kind of focused on more upgradable, high throughput, low cost chains right now that also are kind of fit in with the regulatory requirements.
On the DeFi side, the recent hypes, RWA and LS DeFi has definitely been a focus. We get inflow of all these kind of deals a lot every day. And I actually agree a lot on the order book side. One of the portfolio that we backed and actually are doubling down on investment is called Orderly. That's a order book infra going from near to multi-chain now. So I think from exchange background, the central exchanges, which is not regulated, I don't think is going to work. I think the whole market share for central exchanges like Binance, like all of the other ones, even like Huobi, right? I think the market share for them is going to be just continuing decreasing from today and now on. And regulated exchanges with license, with local support, I think it's going to be taking a lot of that market share. And then on the other side, it's going to be decentralized exchanges with order book experiences that can actually facilitate institutions to trade on and also have a very friendly UI UX for onboarding a lot of the retail, especially from Web 2, because now DAXs are not really working well for onboarding mass adoption of users. So that's like something we've been continuing to focus on, order book DAXs, and especially DeFi infra that powers up those kind of DAXs that can actually aggregate a lot of liquidity from different chains and different market. And then we're also continuing focusing on cash flow business. I know it can sound crazy for crypto projects, especially in bear market. But platform business like exchanges, like NFT platforms, actually still very, very profitable. So one of the large bets that we did this year is called Ubox, is a NFT marketplace based out of Hong Kong now. As the regulations in Hong Kong has grown so friendly. Basically three things: they're now approving ETF, ETP. They're now giving out exchange retail license, and also they are classify. They classify. Just walk up.
Sorry, I'm late.
You need to take a lot of soju, I guess, tonight to make up for it. And and then also Hong Kong classified NFT as a commodity. So that's huge news, right? You don't actually need a license to sell NFT in Hong Kong anymore. And the reason we backed Ubox so much is because of the operational expertise they can bring in. And I think that's one of the edge Asia has. That's why we're spending so much resource and time being here, right? Like KBW and then Token next week, is because we see user operational skill sets from Asia-based exchanges actually have a lot of core competence compared to West. They've definitely lead a lot of the infrastructure and tech development. So Ubox was able to make 180 million revenue last year and is still sustainable as of today. And we're really bullish about a lot of the marketplace actually happening and growing out of Asia, as we have lots of great IP in not just Korea, but also Japan and other very culturally deep countries. And that's something we're very bullish about. And also investing into gaming studios, exploring on-chain games. And then last but not least, ZK. We are one of the early investors in this stage that backed a lot of the ZK protocols and infrastructure, like ZK Link and ZK Power DID projects and data analysis, privacy protect. So yeah, the list keep going on, but happy to talk to you guys off stage about the more things we invested in.
That's great. Hi, Gabriel.
Hi.
Maybe
Hi.
you can tell us more about yourself and your.
Okay, sure. Okay, look, we've got 15 minutes left, so I'll keep it very short. Hi, Gabriel. Sorry, I'm late. I underestimated or overestimated how much time it takes to go from Gangnam here, so I do apologize. Very quick one. Deputy CEO of ARC. ARC is basically a digital gang. We are a reimagination of a collective. We are based in Asia. We are a membership club that's basically NFT gated. Some of the things which the community does, there are about 40 members from ARC here at KBW this year, not just from Singapore, but from all over Asia and beyond as well. We run quite a few activities, anything from simple gatherings, meetups, till basically talking about investment opportunities, allocations, as well as duty and advisory on top of that. And some of the fun stuff, but we'll get into that as we go along the panel. Thanks.
Thank you, Gabriel. Apart from providing capital, what are some roles or value add you give to the project?
Sure. So I guess for Saison Capital, although I kind of work for a bank right now, most of the investment team are not bankers. All of us were operators before and were part of early stage companies and were part of it until it kind of grew to unicorns or something. And so that's definitely one, I think, point where, for example, last night also founders can call me at 2, 3 a.m. and, I don't mind, even if they just woke me up from sleep or whatever. But that's one thing, being able to relate, because the typical banker we see, it's really hard for them to relate to what a startup life kind of looks like. And then secondly, from Saison side, we also have 80 engineers or so that we can deploy for our portfolio companies as and whenever needed, based on the requirement and priority, because there's quite a long list of portfolios and some of our other venture fund portfolios as well that also want to get access to us. And then secondly is, especially in the RWA space, we have been contributing a few $1 billion every year to several RWA fintech companies in Southeast Asia, India, and obviously Japan. And that is definitely one angle we are looking for in the crypto side. Maybe not start so big. We are doing a bit small stuff, so we can help a lot with the underwriting process, the overall distribution process, and basically how to build a proper lending business, right? and secondly, we also invest in other funds, right? So that kind of helps quite a bit whenever funds are looking to raise money, because in the bear market, like sometimes you can't get in the door without a warm introduction, unfortunately. And secondly, and lastly is, like we personally also have like a few people that kind of help some of our DeFi portfolio companies a lot, especially with the smart contract and also in how to incentivize market makers to come on and how to get the volume up and running, because that's what we've been doing like the last few years as well. And yeah, hopefully that kind of helps them.
I think I already touched upon this a bit, but the things that we do, right? So first of all, is the token side. We help with the design of the token, go to market for the token, help them with exchange listings, building up the community, as those were kind of the things that we've been doing in the past few years, and also how to do like a better secondary market strategy and access to more liquidity for a token recently. And then the second part is more about, I guess, creating an army for the portfolio companies to actually grow, right? Not just the people we worked with in the past years, our LP, and also our protocol itself. So for example, some of our protocol has been really helpful to my other portfolio companies, like social related projects like CyberConnect and Project Galaxy are both my portfolio company, and they were able to, through their campaigns, bring in a lot of on-chain users and real token holders for my other portfolio companies. And also technical support as well, that's the third part. We do have an in-house ZK studio who can provide technical support, and especially in this market, a lot of pivoting happening. So we would sit on calls with portfolio companies and guide them through the pivot for the project as well.
Yeah, I think the both of them covered it a lot more. I think ARC as a collective is a little bit different. We don't have the underwriting responsibilities. We've got our own builders and everybody in the community. I think one very big difference ties back to what we do in ARC. Every single member, you can just pay to enter, like a typical country club, where the more you pay, basically the earlier you get access to. It will be a little bit different. Everybody has to be vetted and verified. So basically, when it comes to either sharing of deals, looking at deal flow, looking at what's new, it basically serves as a very good due diligence process and everything like that. With regards to like token design and everything like that, with all due respect, I leave it to the experts to do that. But one thing ARC does very well, especially when we look at either deals or we look at other projects, it serves as a base of due diligence in a very short way.
Thank you, Gabriel. Sharvin, what are your thoughts about layer ones and DeFi? How are they different in Asia compared to the rest of the world?
Sure. So I guess how we think about layer ones. So maybe if I go back all the way back to 1990s when dial-up was 56 kbps, I think it was pretty useful. I think it was pretty okay because there was not much usage of, I guess, the internet back then. But then you look at, I guess, things like Bitcoin, Ethereum. I think Bitcoin is 1 point something Mbps. I know you have the Lightning Network and everything, but it doesn't really affect too much in the outcomes. Like that's all we should be caring about, right? And then for Ethereum, it's kind of like also some single-digit Mbps, which is, I guess, from the 2018 to 2020 region, maybe it was okay because the usage was not too much. But now that you have insties and TradFis like us coming in, or Bank of America that's actually coming in, those kind of net efficiencies are not going to help anyone in the long run, and in fact could actually help bring down the ecosystem, right? Because there's a lot of flow that comes in, and we tried every blockchain, like more than 60 blockchains, just to figure out what works for us, what was going to help our loan book a bit. And also the main variable thing is the gas cost. For us, like any financial institution, the cost to income ratio is always a trouble. And anything to do to help improve that helps the company overall very well. And so I guess and then if you look at more high throughput upgradable chains, that's what we want to focus on. So it can be Solana, it can be Aptos. We kind of focus a bit on that because we also want to focus on ecosystems or infrastructures that have been getting approvals or at least getting some form of endorsement from regulators in the countries we are operating in, and where we get the letter from the regulators that say, it's okay to build on this chain, because it's not the same for every chain right now, unfortunately. But TLDR is high throughput, low cost, and we just get our stuff done. We don't care about the tribalism. And with regards to DeFi, obviously, I think speed matters a lot. For example, if you're super slow in the chain, traders pay, for example, HFTs pay $215 million a year just to get an extra 1 millisecond of latency or something. And it's not something I think people in crypto just take it for granted, the speed side. So what, it's fast or whatever. I mean, it's about the infra at the end of the day more than everything else, and the results that come from it. So we just want to focus on anything that is efficient, and we won't get in trouble later down the road when our operations are too reliant on it.
What do you want to add?
Views on layer 1?
Yeah, your views on layer 1 or DeFi.
So for layer 1, right? Okay. So back in 2017, we invested in a lot of the layer 1, and back in 2018, when liquidity was crazy, some of them listed token performed really well without even working mainnet. I think that all narrative-related story is gone now. And the newer layer 1 and upcoming winner, I guess, is I think gonna have a few qualities. First, of course, is increasing efficiency and have a TPS that can at least hold what's currently on chain, not having a crazy high gas fee, without sacrificing decentralization or security to a certain level. Because I just think that it is already a mathematic problem. It is a impossible triangle, right? But you don't have to put 100% of it all decentralized or going extreme. But I think there are balances that can be found. We've seen some really good design right now with the newer upcoming updates with existing layer 1s and new layer 1s. And I think the second most important quality is to go to market, not just for users, but also for onboarding great developers. And you also need tons of capital resources. So all of these things goes together to build ecosystem, because layer 1, you can think of as in the Web2 world, iOS or Android, right? You need all the good developers, you need the users and access to the market, and also support on the operational side and capital side to make sure it actually work. Curious to see what's gonna be in Web3 for layer 1 or layer 2 ecosystems. Probably not gonna be winner takes it all. Probably we'll see still lots of them existing in a few years. But as a role of the investor, we're just trying to find the best team that builds on all the different layer 1s, and I think the future is gonna be multi-chain, cross-chain anyways.
Thank you, Ciara.
Yeah.
Gabriel, you want to add?
I think there are too many layer 1s.
Yeah.
I don't know. I'm very simplistic. I think there are too many layer 1s.
Yeah, there's a lot.
Yeah, I think, look, as an investor, I think it totally makes sense, right? Why do we invest in, why do any of us invest in layer 1, layer 2s and everything? Because there's an opportunity. There's money to be made, right? Obviously, we look at the potential of blockchain and everything. God bless that. That's why we're here, all in this room. That's why we're on this stage as well. But the opportunity here with layer 1s is there is an investment opportunity, without a doubt, right? Because we're all looking for the Ethereum 20 cent moment, right? That's the reality of it. And also, when it comes to what Ciara said about, mass adoption, the way I see it is that it's not about mass adoption. The reason why, and with all due respect, I know Sharvin's involved in a lot of the other protocols as well, right? And Sharvin's a member of ARC as well. It's that at the end of the day, it's efficiencies, cross-border, cross-chain, bridging, blah, 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 all this really matters. But at the end of the day is, where's the opportunity lie, right? And I think that's also one thing that a lot of us look at. Where does the opportunity lie, right? And some of these chains are more awesome. Some layer 2s, layer 3s, maybe next year we're talking about layer 5, right? It's, at the end of the day, it's what's more efficient. Where's the opportunity? Where's the opportunity to scale my business? Where's the opportunity to make money, right? That's why we're all here. Right? That's the reality of it. So that's my take.
That's very true.
I know. We've had this conversation before, House.
Yeah. Okay, so I think last questions. You have a few minutes left. how do you guys do risk management when invest in early stage?
Pray.
What?
I mean, does anybody know any better? Real question. Does anybody
how do
really
you
know
pray?
any better, right? Like, yes, we can come up with the usual spiel, right? Look at duty, bet on the founder and everything like that. But like, do we really know? I mean, if you talk about venture capital investing, right? Whether is it Web 0, 0.5, Web 1, Web 2, Web 5, whatever it is, right? We're all in the business of investing in the future. And sometimes we make wrong bets, right? I've made plenty of wrong bets. I've made some retarded bets, right? And what else can you do? Like, Arif is smiling down there because, Arif is a very good example, guys. Arif, by the way, is one of the top game studios in Indonesia. He's just sitting at the corner pretending nobody sees him. That's why I'm pointing him at on purpose. But same thing as well. You don't know. A lot of us passed on Arif when he was trying to build a game 12 years ago. Now he's one of the top game studios. I look like a fucking idiot for not investing in him, right? He works with Square Enix and everything, Final Fantasy and everything, right? So what can I say? Pray. Sorry, I just wanted to add some fun. You guys look fucking bored. I'm sorry.
Well, I have to say, I disagree on this. We do pray too, but we do have fiduciary duty to our LP. So I guess, it is a lot of luck, right? If you can actually get to invest in, say, TikTok pretty early and make, thousands of returns. But there are things that we can do in the process to make sure that we can see some of the very obvious red flags. So for example, we've seen a lot of safe investment plus token warrant recently compared to SAFT. There are some teams that actually put in the work and work with the legal team to understand how the ratio works and how they can design the whole structure of the fundraising. So that's one thing. And then also their understanding of treasury management so they can actually survive, right? That's one thing. And then technical due diligence to make sure that what they're building aligns with what they're telling us they're building. And also, like you said, there are some really good Web2 studios coming into Web3. Those are successful experiences with building something from scratch. And teams with successful experiences with building before is definitely one plus. And also their understanding of token, whether the token go-to-market and product go-to-market can be two separate things, and they're actually willing to learn about it and deploy more resources into building the token very successfully. So there are, kind of like due diligence process we have to go, I guess.
No, but you see, the due diligence process on this, right, is that if the investor also gets involved in advisory of tokens, right, as startups and as founders, you're also going to make sure that an investor is not just looking out for their interest, but also the portfolio's interest as well, right? So it's very, very important that also that the balance is struck. It's kind of like the balance of the force, where you're going to make sure that any tokenomics and everything. And I think that's why like Ciara and the team do a fantastic job, because it's always about that balance, right? It's about the advisory, right? Especially with token warrants in this example, right? Or what Saison does as well, right? But I think one thing as well is that what exactly is that balance between advantages to the founders versus that, right? At the end of the day, tokens is a bloody beauty. Right, you don't have to give up equity. You don't have to do what Travis Kalanick did in Uber and everything, and or even like what Anthony did with Grab in Southeast Asia. Right, tokens is a bloody beauty. Right, it allows us to expand. It allows us to scale businesses it doesn't have, but it's about that balance as well. That's also very, very important.
Right. And then pray to Jesus, Buddha, and Satoshi.
Oh yeah.
For everyone.
Generally in that order, yes.
Let's hear from Sharvin.
Yeah, man.
They kind of covered it pretty well. But with regards to our due diligence process, obviously, like all of us kind of come from a technical background, so we do grill our founders a lot on the code and try it out ourselves, and we take maybe 1 to 2 weeks per deal for it. And a minimum for us is we need to do at least 8 reference calls on a founder or anyone from like the key co-founders or something. And where for us, like, obviously, it's a very conservative, Japanese institution. So, like, anything to do with integrity, ethics, it kind of comes really important to us. And we can't be, investing in any company that, has been doing weird stuff, right? And surprisingly, like, we thought like some founders were really good, and then after like 5th reference call, they're like, oh my God, this guy did something 2 years back like this. And immediately the deal is cut off. Like we take the integrity and ethical side really seriously. And even if it means losing money, and we have gave up on quite a few deals that way, we don't care. We just want to back the right ethical founders who are doing the good job that they are supposed to do. And in terms of like other stuff, in terms of diversification, like it's more important to diversify amongst your different subsectors so that you're not heavily exposed. I mean, there's not much you can do like as a venture fund, to be honest, to so-called have a risk management process. But that being said, we are starting a liquid fund, so yeah, we could probably hedge our bets as well from there, but mainly focus on the blue chip tokens.
Yeah, I like that, the 8 reference calls. It's very good. Gabriel, you want to talk?
No, nothing.
Yeah, I think we've come to the end of the session. So it's been a fun and useful session. I'd like to give thanks to our speaker,
And thank you, House.
Sharvin, Gabriel, Ciara, and also the audience for being such a wonderful.
They're just here for the
listener.
air conditioning, I'm very sure.
Yeah. So let's continue to innovate and collaborate and help shape the future of blockchain in Asia. Thank you.
Thank you, everyone. Thank you.
Thank you. You could see a very honest point of view for every single